Many shippers believe that the carrier is responsible for any loss or damage incurred when goods are in transit. But that responsibility is limited by a concept known as the carrier limit of liability. Carrier limit of liability determines the maximum amount of money that carriers can be held liable for in the event of damage, loss, or delay of cargo. However, limits of liability vary between carriers and situations. First, let's go over what is not covered by the carrier. Carrier limit of liability only covers damage or loss of goods that occurred due to carrier negligence. Therefore, carriers are not held responsible for damage or loss that occurs due to an act of God like inclement weather or a natural disaster, fire, interference by a public enemy of the U.S., acts of war like strikes, riots, or civil commotions, improper packaging of cargo by the shipper, government action like road closures, quarantines, or trade embargoes, goods prone to spoil or become defective over time like produce, tobacco, or medical supplies, latent defects to the hull or machinery, seaworthiness of the vessel, and criminal acts or negligence by the master or crew. By looking at this list, you can see that the carrier is not actually very liable. In fact, most of the riskiest parts of shipping internationally are expressly excluded. Okay, so now let's go over what is covered by the carrier in the event that the carrier is liable for your loss. For a carrier to be liable for loss or damage, the shipper must prove that their cargo was in good condition when given to the carrier but was delivered damaged or not delivered. The burden of proof falls fully on the shipper. Shippers must also prove the amount of damage that they are claiming. However, the reimbursement for the loss will most likely not equal the value of the lost or damaged goods. This goes back to the original definition for the term, where it states, carrier limit of liability determines the maximum amount of money that carriers can be held liable for in the event of damage, loss, or delay of cargo. The carrier is limited in the monetary liability they have towards shippers. Carrier limit of liability differs significantly between commodity types, but seldom covers the loss suffered by the shipper. Carriers will only be held liable for a certain amount per pound of lost or damaged goods, which can be as low as 10 cents per pound. There is also a maximum carrier liability per occurrence of goods being lost or damaged. Some common examples are household goods, which have a carrier liability per pound of 10 cents and a maximum liability per occurrence of $10,000. Uncrated machinery, which has a carrier liability per pound of 50 cents and a maximum liability per occurrence of $50,000. Furniture, which has a carrier liability per pound of $2 and a maximum liability per occurrence of $50,000. Computer systems and components, which have a carrier liability per pound of $5 and a maximum liability per occurrence of $50,000. So, you may be left asking, how can I protect my business from a major loss when shipping goods internationally? The answer is to secure a marine cargo insurance policy for your business. A cargo insurance policy can be written to fit the specific needs of your business and ensure that you are fully covered in the event of a claim. Learn more about how cargo insurance protects you in the links in the video description and contact TRG to get a marine cargo insurance quote for your business. And don't forget to subscribe to our channel for more informative videos on the international trade world.